Right now, millions of Americans over 65 are filing their tax returns and leaving hundreds, sometimes thousands, of dollars behind, simply because they don't know the rules have completely changed this year. The IRS has issued a formal filing alert for 2026, and if you turn 65 on or before December 31st, 2025, there is a brand new deduction waiting for you that most people have never even heard of. Thanks to the One Big Beautiful Bill signed into law, taxpayers 65 and older are now eligible to claim an additional $6,000 deduction per person, and if you're married filing jointly and both spouses qualify, that jumps to a full $12,000. And here's what makes this even bigger. This deduction is available whether you itemize or claim the standard deduction. On top of that, the standard deduction itself has increased to $30,200 for married couples filing jointly in 2026. The IRS has also confirmed that paper refund checks are being phased out, so if you're still waiting on a check in the mail, you could face serious delays. This video breaks down every change, line by line, so you don't miss a single dollar the IRS legally owes you. So let's start from the very beginning, because a lot of people are confused right now about what exactly changed, why it changed, and how it affects what they owe or what they get back. This whole shift came from a piece of legislation that was signed into law in the summer of 2025, called the One Big Beautiful Bill. That bill didn't just tweak a few numbers on a spreadsheet somewhere in Washington. It fundamentally restructured the tax picture for millions of Americans, and the people who stand to gain the most from understanding these changes are people who are 65 and older. So, if that's you, keep watching, because this is money on the table that belongs to you. Let's talk about the new Senior Bonus Deduction first, because this is the centerpiece of everything the IRS is alerting people about this filing season. For tax years 2025 through 2028, taxpayers who are 65 or older may be eligible to claim an additional $6,000 deduction per person, and if you are married filing jointly and both spouses qualify, that figure doubles to $12,000. Now, the word deduction is important here, so let's make sure we're all on the same page. A deduction is not a credit. A deduction reduces the amount of your income that gets taxed in the first place. So when you take this $6,000 off the table, the IRS is looking at a smaller slice of your income when it figures out what you owe. For someone sitting in the 12% tax bracket, a $6,000 deduction can translate into real savings of $720 or more. For a married couple claiming the full $12,000 together, that's over $1,400 that stays in your pocket. That is not a small number when you're living on a fixed income. Now here is something that is tripping people up left and right. This $6,000 senior bonus deduction is completely separate from the regular additional standard deduction that seniors have always had available to them. These are two different things, and you can claim both of them at the same time. Seniors over age 65 may still claim the existing additional standard deduction of $2,050 for single filers and $1,650 for joint filers. And on top of that, they may also claim the new $6,000 deduction as a separate benefit, so you are stacking these deductions together, not choosing between them. That's a critical detail that a lot of people are missing, and if your tax preparer hasn't brought this up yet, you need to ask them directly. And speaking of the standard deduction, even that number has gone up in a meaningful way this year. For tax year 2026, the standard deduction rises to $32,200 for married couples filing jointly, and for single taxpayers it goes to $16,100. Now, when you start adding everything together, the standard deduction, the senior additional deduction, and the new $6,000 bonus, the total deduction available to a single senior filer can be well over $23,000 before they've even touched a single itemized expense. For a married couple where both spouses are 65 or older, the combined total deductions available could push past $45,000. That means a very large number of retired Americans may find that their taxable income has dropped dramatically, and some may owe nothing at all this year. But wait, there are income limits, and this is where people need to pay close attention, because not everyone qualifies for the full amount. The new $6,000 deduction begins to phase out for taxpayers whose modified adjusted gross income exceeds $75,000 for single filers, or $150,000 for those filing jointly. The deduction phases out completely at $175,000 for single filers and $250,000 for joint filers. So if your income is below those thresholds, you are in the zone to claim this in full. If you're somewhere in between, you'll get a partial benefit. And if your income is above the upper limit, this particular deduction won't apply to you, but the increased standard deduction still will, so there's still something there for you. Now let's talk about Social Security, because this is the topic that causes the most anxiety for retirees every single tax season. And this year, there are some genuinely meaningful developments worth understanding. A lot of people don't realize that Social Security benefits can be partially taxable at the federal level depending on your combined income. The way the IRS calculates it, they take your adjusted gross income, add in any tax-exempt interest you earned, and then add in 50% of your Social Security benefits. If that combined number crosses certain thresholds, a portion of your benefits becomes taxable. For single filers, that starts at $25,000, and for married couples, it starts at $32,000. These thresholds have not been adjusted in decades, which means more and more retirees have been getting pulled into taxability territory over the years as their incomes crept up. Here's where the new law actually helps. The White House Council of Economic Advisors says the new $6,000 bonus senior deduction will increase the share of seniors who won't have to pay taxes on Social Security benefits at all, from 64% all the way up to 88%. That is a massive shift. The deduction effectively lowers your taxable income enough that many seniors who were previously paying tax on a portion of their Social Security benefits will no longer have to. If that's your situation, this is the year to really run the numbers carefully before you file, because your tax bill could be significantly lower than you've been expecting. And there's more happening on the Social Security front that you should know about. Social Security beneficiaries received a 2.8% cost of living adjustment for 2026, which means your monthly payments have gone up. That's the good news. The slightly tricky part is that if your total income went up because of the COLA increase, you need to make sure you're still in the right tax bracket and that the increase hasn't pushed your combined income over any of those thresholds we just talked about. For most people, it won't be an issue, especially with the new bonus deduction bringing income down on paper, but it's worth checking. And if you think you'll owe taxes on your Social Security, you have the option to request that withholding is taken out of your monthly payments automatically. The IRS allows 4 withholding rate options directly from your Social Security check: 7%, 10%, 12%, or 22%. You can set that up by logging into your Social Security account online or by calling the SSA directly. Now, let's talk about something practical that has changed in how you actually receive your refund this year, because this is catching people completely off guard. Due to a presidential executive order focused on modernizing government payments, the IRS is now phasing out paper tax refund checks entirely. That's right. The paper check that millions of Americans have been receiving in the mail for decades is going away. The IRS is strongly urging everyone who does not currently have a bank account set up for direct deposit to open one now, so that your refund can be delivered electronically. If you don't take action on this, and you're still expecting a paper check, you could be waiting a very long time or experience significant delays in getting your money. This is not a rumor. It is an official IRS policy change, and it is happening right now during this filing season. There's also a very important reminder for every senior who is still working part-time, whether it's a few hours a week at a local business, some freelance work, or anything else that generates earned income. Any earned wages are subject to withholding for income tax, Social Security tax, and Medicare tax, even if you are already receiving Social Security benefits. A lot of people assume that once they're collecting Social Security, they're somehow exempt from payroll taxes on part-time income. That is not how the tax code works, and the IRS is specifically reminding seniors about this in their 2026 filing guidance. Make sure all your income from any source has been accounted for before you submit your return. Here is another piece of genuinely good news that applies to a lot of people watching this. If you earned less than $89,000 in 2025, you can use the IRS Free File program to prepare and electronically file your federal income tax return at absolutely no cost. Free File is available directly through irs.gov, and it walks you through the entire return step by step, including all of the new deductions we've been talking about. For seniors who need in-person help, AARP Foundation Tax Aid is also available and has thousands of locations across the country in libraries, community centers, malls, and senior centers, where trained volunteers will help you file for free. You don't have to pay a tax preparer hundreds of dollars to claim what you're entitled to this year. Let's also take a moment to talk about what you need to have in hand before you sit down to file. You'll want your Social Security SSA 1099 form, which shows your total benefits for the year. You'll want any 1099 forms for pension income, IRA distributions, or investment income. If you had any medical expenses, mortgage interest, or charitable contributions, gather those records too, even if you expect to take the standard deduction. Because this year with the higher numbers, it's worth double-checking which approach gives you the bigger benefit. And if you need a replacement SSA 1099 because yours got lost or damaged, you can get one quickly and easily online at ssa.gov by setting up a free My Social Security account. The bottom line this year is straightforward. The rules have changed in ways that genuinely favor people who are 65 and older. The deductions are bigger, the thresholds are more generous, and the relief being offered is real. But none of it does you any good if you don't know about it, don't claim it, or file your return the same way you always have without checking whether something new applies to your situation. This is exactly why videos like this one exist, because the IRS puts out the information, but it doesn't always reach the people who need it most. You now have the full picture. Use it.